Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil.
Paris rapeseed. From the sloppy-looking late April to early August head and shoulders top, the market tried lower but did not fulfill its potential on the downside, having been stripped quite a bit of its bearish incentive by the support of the slowly rising long-moving average, currently 472.25, and finally rejected back up by the support from the 50% absolute Fibonacci line of 445.5. Now, this rejection did not all happen at once, but during most of August and into the first half of September. In the process, prices formed a not very pretty looking reverse head and shoulder pattern with a fairly flat neckline, which is currently at 477 even. 7 weeks ago, prices broke higher over the previously mentioned neckline as well as over the medium moving average, currently 483.5, stabilizing over both of these for about a week before moving higher. 6 weeks ago, I laid out potential primary and secondary topside targets, and these were soon reached in mid-October. Prior to this happening, I also said 6 weeks ago, and I quote, "There is one other feature I would like to highlight, though at this time I am not sure if it is very relevant, so it's more like a just be aware type situation. It's the construction of a possible mid-August to date rising expanding wedge pattern, and that's currently 528 to 542 even. I've not highlighted on my daily chart as I am not sure of the weighting I should give it, but it is something just to be aware," end of quote. I should further add that 5 weeks ago I said the following on this pattern as well, and I quote, "There is also now the possibility that this expanding wedge pattern may be morphing into a late September to date, quite acute bull channel. This development is one to watch," end of quote. Well, I have since highlighted this pattern in purple, and you can clearly see that the market has followed this pattern higher with one aberration that has seemingly been repaired. I'd continue to look at the purple, formerly bullish expanding wedge pattern come now bull channel to continue to lead the way higher, for now, though it's getting awfully narrow. So what have we in a way topside? Well, we are over the dark blue neckline, currently at 514.5 of the June to October 2023 head and shoulders top, as well as the congestion between 513.75 to 519.5 from September 2012, as well as the July 2023 high at 526.5. But we do have, how shall I say this? We do have limited congestion from between this July 23 high up to the February 23 high of 565 in the form of a quite large bear flag stroke bearish halfway hesitation, originating from January to March 2023. That was a big move down. This right now does not look, not yet at least, strong enough to stop a move higher, as we seemingly have sufficient ammunition below, but it might erode the bullish incentive enough to cause a potential rethink. However, it will take space and it will take time. And I'm not sure about the availability of those two quantities here. Winnipeg canola. During very recent times, the moving averages have acted as a support, as a resistance, and also as a nuisance. Last week, the market utilized the flatlining gold long moving average, especially, and that's currently at 628.10, and the sphere of influence of the mauve medium moving average, currently 622.10, and to a lesser extent the green short medium moving average, currently 621.60, as supports for an attempt higher. This was also true of the green short medium moving average during mid-October. However, these are not the only features that I wish to draw your attention to. You see, 5 weeks ago I said, and I quote, "The activity over late July to date has also created a quite lopsided double bottom pattern, and last week we were trying to break above the neckline, which approximately equates to the 2021 low at 629.60. Now, as I said last week, so that is now 6 weeks ago, And I quote, "I'd normally wait a little while for a confirmation for this move higher, but I'm tempted with what I've seen in other markets to lay out some potential targets topside right now." Thus, the primary target X would be in the 671.80 area with a secondary harder to reach target X1 up in the 688.10 area. These, of course, presupposes that what I see right now as a double bottom does not become in due course a bearish cat's ears pattern. End of quote. Well, since then we not only have chosen to stick with this idea of a double bottom, but to develop it further and possibly enhance it by looking at the whole August to date action as a possible reverse head and shoulders bottom, with a highlighted dark blue neckline currently 661.80. Last week prices pierced this neckline in an effort to try and trigger this pattern, but as yet have failed. And the pattern has not been triggered, but is waiting in the wings. Should the dark blue neckline be broken, properly broken, on the way up towards targets X and X1, at which time I'll likely lay out fresh targets for this new, current potentially reverse head and shoulders pattern. One other potential feature I'd like to highlight, and it is something I laid out last week, and I quote, "You see, we're awfully close to forming a weekly key reversal up this week, and we are not there yet, but please keep an eye on last week's high at 659 even, and if it is exceeded this week. If it is, then keep an eye on Friday's close, whether or not prices close over 654.90 or under 645.90, end of quote. Well, last week on the Friday, prices not only exceeded 659 even, but also closed up at 665.10. Thus, last week was a weekly key reversal up. This week, we have not seen a follow-on higher to this pattern. Indeed, we have pulled back a bit, but only as far as within last week's range, and towards the top side of it as well. Hence, keep an eye on any potential moves higher, as they will not only be a potential follow-on to last week's weekly key reversal up, but they could also be the trigger to that reverse head and shoulders pattern. Bursa Malaysia crude palm oil. I said 6 weeks ago, and I quote, "Of all the oilseeds and veg oils, palm oil has been the toughest to decipher in recent days. There's been a lot of activity, and the changeover gaps, most notably in mid-September, have been a great hindrance. However, there have been 2, possibly 3 patterns here that have influenced the market and seem to have captured it somewhat, at least since April." End of quote. Okay, so the first of these patterns is the broken upper time, currently at 36.94, of the August to November 2022 bearish shift pitch hawk. I know this is way down below the current market, but the upper time has acted as a declining support throughout late spring and summer. The second is the neckline, currently 42.98, of the September to November 23 reverse head and shoulder pattern. This is also way down below the market, but it is important. Finally, I'd also possibly add the neckline, currently at 43.87, of the September 2015 to November 2017 head and shoulders top. I'm really not sure about this one. This also is way below the market, but it is significant, as all 3 of these are. Anyway, in early October, the market broke up over the lower September 23 to reverse, the lower September to November 2023 reverse head and shoulders neckline, and became somewhat capped by the next neckline above, the one from the September 2015 to November 2017 head and shoulders top. This bracketing of the market between the 2 necklines happened throughout most of October and eventually led to the formation of a mid-September to early November bullish halfway hesitation, which saw its topside targets reached last week. Prices next started testing a pair of the 50% Fibonacci lines overhead, one from the July 2019 to March 22 move at 49.64, and one from the May 20 to March 22 move at 49.92. And late last week, it looked like the market was starting to get clear of one, if not both of these, on the upside. Prices then this week pushed up over the late June 2022 high at 51.17, but failed to sustain the move, with the next resistance being a changeover gap between 53.20 to 54.18, also from June 2022. And then we have above that the big 50% Fibonacci line, the January 21 to March 22 move at 56.06. Remember that level, it will come in useful later on. However, prices instead have pulled back to the pair of 50% Fibonacci lines, where they are seemingly hesitating today. At this point, I would like to raise a big final point, a point I've been stressing about now for 34 weeks. I gave my thoughts back then on what was going on thus, and I quote, "So, what now? Well, for this, I went to my standby on such occasions, the longer term monthly patterns. And there was one clear standout level that needed to be watched, and that was the November 22 high of 44.08. This is a key level on the top side, because if it is broken, properly broken, then there are very significant potentials topside. Similarly, if it holds in that area, then there are significant potentials on the downside. So watch to see if prices reach up to the 44.08 area, and then what prices do at that level." End of quote. I had only as recently as 5 weeks ago the following, and I quote, "It seems obvious to me at least that I should still consider monitoring this 44.08 level, not only because it is a longer term play, but also to see if its influence could be felt in the very recent action we have seen this week and possibly in weeks to come. We are now closer to it than we have been since early April." End of quote. We are now well over the 44.08 level, and since last week I've started analysing this longer term pattern to ascertain what the opportunities may be. Now, please note we have only had a single month's close over 44.08, and that was for October this year. And this is a very long term pattern. Ideally, I'd like another consecutive month, and it is a very hesitant but on my part, but I will try now to give a preliminary idea for what may have as an initial opportunity topside, and that would be above the high of my daily chart, up in the 5600 area. This would also tie in with the really big and important 50% Fibonacci line of the January 21 to March 22 move, which is up at 5606. Please just be aware of these things as we go forward.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.